What's up traders, welcome back to another video, and in this video we're going to be talking about daily bias. So this trade played out perfectly. Why? Because I knew the daily bias. In this video I will show you how to do the same. What is the daily bias? So daily bias is the expected price direction movement for the day. It helps traders avoid taking counter trend trades or getting trapped in liquidity sweep. It's not only about trade direction but where the price is likely to move to. Now let's talk about why daily bias is important. Daily bias is important because it prevents taking trades against the dominant move of the market. It also helps you align with smart money flow, increase your win rate by trading in sync with the market structure, and keep you from getting caught up in false breakouts. How to determine daily bias? There are steps that you can take to determine daily bias, and these steps are market structure shift, previous day's high and low, order blocks and fair value gaps, liquidity zones, news and fundamentals. I'm going to talk briefly about each step that I just mentioned, starting off with market structure. Market structure is the foundation of bias. If the market is forming higher highs and higher lows, that will equal a bullish bias. If the market is forming lower highs and lower lows, that will equal a bearish bias. And if the market structure is shifting, your potential of bias could shift as well. Now let's talk about step number 2, previous day's high and previous day's low. Price often takes liquidity from previous day's high or low before moving. Liquidity grabs or rejection could confirm your bias. If price breaks and holds, bias may shift, so you gotta be careful. Depending on what the market structure is saying, using previous day's high and low could help you with confirming your bias. Step number 3, order blocks and fair value gaps. If price is near a strong order block or fair value gap, bias may react from it. Order blocks are near key reaction points, so you gotta be careful. If you want me to talk more about order blocks and fair value gaps, comment down below. Step number 4 is liquidity zones. This is where the smart money trap most traders. You need to try avoid getting trapped by false breakouts. Market normally moves towards liquidity before making the real move. For example, let's say we're in a bearish trend. The market price sweeps high and then dumps, then it would have confirmed our bearish bias. And the final step is news and fundamentals. These are major events that can shift the bias. So let's say you're in a bullish setup. If there's a news event that occurs during a certain period of time, your bias can shift from being bullish to bearish just from the news event. Now let's move to common mistakes traders make. First mistake that traders do is they force the bias. Instead of letting price action confirm it, they like to force if it's a buy or a sell. You might be even trading in external market structure than internal market structure. Now the second thing is they ignore liquidity grabs and mistaken them for reversals. This always happens, and it's better for you to wait for your bias to get confirmed than for you to just get caught in a fake breakout or liquidity grab. The third one is not checking higher time frame. I think I've always talked about this even on my market structure video. I talked about checking higher time frame. It is important so that you know you can have your confluences on higher time frames. And the last thing is overcomplicating it. Bias should be simple and clear. Now that you understand how to determine daily bias, let's apply this in a real time. I'm gonna show you a live chart breakdown of how I found the daily bias and how I executed. Okay, so what are you looking at right now is a gold chart on a daily time frame. I'm gonna do my top-down analysis on this time frame. I also took a live trade on Thursday last week, and it played out beautiful. Market structure is telling me it's a bullish market, so I was looking for buys. I just had to be patient with it until my setup got respected. So let's do the top-down analysis now. So the way I do my top-down analysis is I have a range, a daily range high, right? Let's call it daily range high, and I got a range low on a daily. I got a range low on a daily, right? So right now I am certain that we're in a bullish trend. It's only that we're in the middle of the range when it comes to that trend. So I'm looking to at least target daily range low or daily range high, depending on where the market is gonna go. but the market structure is telling me it's a bullish setup. So I'm probably gonna look to target the daily range high. Now let's go down to a 4-hour time frame. Okay. On the 4-hour time frame, off of the bat, I can notice that we've been consolidating right here. There's been a range that's been going on right here. So I'd like to have the swings outlined like this. I would like these swings to be outlined. Swing high right there, and then this would be our swing low because it literally just broke past this low right here. So it's gonna become our swing low right here. So what I'm waiting for is for the swing high to get taken. That's what I would probably be waiting for. I noticed that we had that like a break liquidity grab right here because it just came down here, created this swing into this area right here. Looks like, if I think on a 1 hour, there's like liquidity there, like a fair value gap or something. Let's go down to a 1 hour. Let's see. Yeah, well, yeah, I would say this fair value gap right here, but that got filled up right there. So I guess it was a liquidity grab, and it did grab its liquidity. So you probably would have your swing low right here before the sweeps. You probably would have had your swing low right here, and the market would have swept the lows and then buy. Honestly, I think I would have bought somewhere around this area, but I don't think I would have, to be honest. I'm not too sure if I would have. But anyway, let's put back this swing back to where it was, right? Because that's the recent swing low that got created by the market. Alright, so now that this is outlined, I had to wait until the swing high got broken. That's when I would have looked to execute my buys. So let's see how it played out. Okay, quite aggressive moves to the upside. Around this time, boom. Okay, see, swing got taken, violated by a really good 3 candlestick formation going to the upside, and it's all with momentum. Now I would like to see for a pullback. I would want to pull back to this order block right here. I would want to pull back to this order block and look for executions. Now that I know that these swings are taken, my target will probably be this high right here, the range high. Let's see how it goes. Okay, interesting. Okay, now that I noticed that this just formed, because this is a swing high, right? It's a swing high that was formed, and then they created a swing low, and that swing high got violated with a really big momentum candlestick, a bullish candlestick. Then I'll switch from this order block to this order block. This will be my order block right here, right in here. That will become my order block. So what I'm looking for right now is for price to come back down. I would want something like this and then skyrocket to the moon. So let's see how it played out. My executions will happen on this order block right here. Okay, boom. And then that happened. Spike. Buy it right there, right? Stop loss right at the swing low right here. Either you can put your stop loss right at the swing low or right under the order block. Let's just put it under the order block just to be safe. And then the target will be the daily range high. But since it's a risk of $10, you'd want to make at least a 1:2 or 1:3 if you want, but at least as long as it's not 1:1, I think you should be all right. You should respect your setup. So I'll put it at 1:2. So risking $10 to make at least $20 sounds like a reasonable risk reward, right? Okay, let's see how it played out. Alright, we're in profits. Boom, boom, and then it skyrocketed. It went straight to the moon. Mind you, this is gold's uncharted territory right now. Like the way it's playing out right now, that's gold's uncharted territory. It's the gold's highest high point that is being formed. So I'm looking forward to see how this gold is gonna play out. I'm very interested to see if it's gonna even push higher, or is it gonna play out just to, you know, range a bit because it made the momentum to the upside. But that's the trade that I took for gold. I took my take profit, I think around 2970 there, around the 297,000. Oh. I took my profit around 2,970 area there. That's where I took my profits out, and it was a beautiful trade. I'm still looking to buy this market. If you want, I have a Telegram group where I'll be posting my daily analysis. Sometimes I post some trades that I take, and join the Telegram and you see the trades that I'll take. You also see the updates that I have for gold and other currency pairs. And yeah, so bias comes from market structure, liquidity, and key levels. I'd like you to keep it simple when you're looking for your bias. Don't try to overcomplicate things. Just keep it simple for you so that at least you still will be able to keep up with your trades. Comment down below, how do you determine daily bias, and let's see what you guys come up with. If this video helped, hit the like and subscribe button for more smart money trading videos, and stay safe. Use proper risk management. Peace.